Hello and welcome to the Gold, Goats, and Guns market report for today, the end of January 2021. And what a January it was. My name's Tom Luongo, and we have a lot to talk about. Quick shout out to all the new patrons, as always. It's been really interesting and gratifying to see people continue to trickle in, even when there's nothing really kind of happening out there. I have to appreciate everyone coming in and wanting to be a member of the group. So, we were going to get started right off today because we have a lot to talk about. And I mean, you know, I say that every time, and it's my shtick and all that. But dude, seriously, like, let's talk about where we're at. This is the day after the election. For those of you who are new, the day after the election, I came on for the Wednesday market report, and I was as black-pilled as you'd ever see me, because I could see it in real time unfolding that they were going to steal the election. And then I could see that they were going to install Biden. They were going to take the House and the Senate. They were going to hold on to the House, take the Senate away from the Republicans, and go through the process of ritualistically humiliating all of us. I literally said all of this at 11 o'clock the day after, in the morning, the day after the election. And from that point forward, I said, and that afternoon, I sat down and I wrote a piece called, okay, Civil War it is then. In which I first said, it's time for us to become ungovernable. To which Mike Shedlock replied, in a word, no, Tom. I said, well, I didn't reply to him because at that point I didn't want to antagonize Mike. About 2 weeks ago, I told him to go fuck himself publicly on Twitter. And he doesn't realize why, because he's not reading why. And everything since then has become, I've called directly down the line everything that has happened. The libertarians refuse to lead. They refuse to take responsibility for the now tens of millions of people who are disenfranchised, if not hundreds of millions of people who are disenfranchised around the world, and certainly here in the United States, who believe their government is illegitimate, who believe they have no voice. And it's now up to a bunch of freaking, autistes and, former hedge fund guys running a subreddit to lead the quote unquote revolution. And these guys aren't necessarily politically motivated here. They just know that this is bad. Now, are they, also trying to, create shock troops that get slaughtered in the process while they make off with millions or potentially billions? Of course. Is that possible? Of course. I wrote about this on my article on Friday. Everybody's going to have an agenda around what's happening with GameStop, sorry. I always get that wrong. BlackBerry, Bed Bath & Beyond, AMC, and now Silver. And they started floating the silver thing on Wednesday or Tuesday. And that's when it became interesting to me. Not because I think they're going to succeed in destroying the silver market, but it's very possible. And some things this morning, I know I'm late this morning. And the reason I'm late this morning is because aside from the fact that I got up late and got started late, it also gave me an opportunity to just catch the zeitgeist of what was happening in the silver market. Around, waiting just to read everybody's comments and to find the tweets and all the stuff that's going on out there. So they're moving directly into the breach, and they're going to take on the biggest banks in the world. Now, we've been discussing on the private Slack server or at least y'all have while I was asleep, some of the reality that's happening behind the scenes. And I didn't have any real hard evidence of anything. I just know that, when you move a stock like GameStop that far, that fast, and you move BlackBerry and some others, and you start forcing brokerages to limit trading, and you start forcing clearinghouses to worry that they don't have any money. And you start putting real pressure on the primary lender banks for the brokerages, which allow them to margin up these short positions. when you realize that it's not just the little bit of money, the couple $1 billion here or whatever that might have blown up Melvin Capital, that it's a far bigger and more systemic problem than that. Now, I didn't see anything in the H.4.1 report this week that would, from the Fed, which would suggest that there was any Fed intervention into this market yet, or at least that the Fed is admitting to or willing to put on their balance sheet. And right now they're willing to put, like, they're adding line items to the balance sheet practically every week. But if this is real, that the demand for physical silver now is off the charts, that there is no physical silver, I just found a couple of things. I just found out a couple of things. One, on Friday, SLV, the silver ETF, added over $1 billion in new shares, meaning the fund managers have to go up and scare up $1 billion worth of silver longs, either physical silver at $27 an ounce or futures contracts. Because remember, SLV is not a physical fund. Okay, it's a mixture of futures contracts and CFDs and a variety of other things. So they can hold just about anything. They can hold pretty much 100% paper silver on their balance sheet, which is what everybody suspects that they do, that they don't actually own any silver, because you can't redeem SLV except under very extreme circumstances for physical silver. In the same way that you can't really redeem even the Sprott Physical Gold Fund, or the Sprott Physical Silver Fund, or the Central Fund of Canada. You can't really redeem those, which are actual physical funds. They have, vaulted physical silver and gold in those funds. But, even under those circumstances, it's very difficult to get any silver out of them. You got to ask for $100,000 worth of silver and blah, 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 or gold or whatever. I mean, the redemption to physical metal out of those funds is, it's sincere. It's not for just, you can't just walk in there and go, I need 5 ounces of silver. It's not going to happen. So the real worry now is they're buying physical silver. They bought APMEX out. QTR just tweeted out that, for example, let me go find this real quick. So QTR just tweeted out, quote, "My friend runs a major gold and silver dealer that's been around 3 decades. I just text him this and his response, and this is his response, #SilverSqueeze. Any noticeable change in silver sales?" asked QTR. Not for my listeners, but in general, like in any meaningful amount. And he's like, "Hey, Chris, it's fucking insane." Quote, "I've been getting between 400 and 500 emails a day for the last week. APMEX stopped taking orders of silver until the market opens up later tonight. They must be massively naked short. Over the last week, we've been doing 5 times anything I've ever seen, including the craziness of last year." Can I anonymously tweet that without your name? Sure. Okay, so there we are. Now, if QTR is not, full of shit, sorry for the invective, but this is the world we live in right now. If QTR isn't full of it, and this is real, then this is real. Okay, $1 billion worth of business on Friday of new shares had to be issued on Friday to the silver ETF. All the major bullion dealers are out of silver. First Majestic, which runs its own mint, is just about out of silver. And Silver Squeeze has been trending on Twitter for 3 days. And every day, /r Wall Street Bets keeps adding hundreds of thousands of people to their subreddit. And they've spawned other subreddits and Telegram channels and all the rest of it. It's now going viral. Okay? It's now turned into something that Wall Street may or may not be able to control. And if the scuttlebutt from the professionals in our group is correct, which is that there are serious liquidity problems for major banks, okay, as of right now, what happens when everyone stands for delivery this week? Because here's the gig. This is what's going to happen. January is an odd numbered month. That means that this is a silver delivery month. This is a silver delivery month, which means that futures contracts that expired on the last Monday, right? They usually expire on the Monday, or is that options on futures? Well, whenever they expire, on the last Friday of the month, last Friday of the Wednesday of the month. I'm a little fuzzy on this stuff, but whenever the January COMEX futures contracts closed, right? Options on futures close on one day, and then about 2 days later, the futures market goes. I'm a little fuzzy on this stuff. I used to know this stuff like the back of my hand, but I haven't really dealt with it in 8 to 10 years. So forgive me if I'm off a little bit on what days they are. And if anybody has, wants to remind me of what the actual situation is, please do so in the comments. But what's important here is that if these guys, the Wall Street Bets guys, had already taken their positions in silver and bought these contracts at $24-25 like last week, then they could be sitting on a lot of delivery this week, right? Potential ounces to deliver, right? Because these guys sort of making money in GameStop and BBY and whatnot all before this, right? And they could have easily funneled out money that they made, on those covered calls that they wrote at, $75 and $50, where they made a crap ton of money. Okay, when you really start to think about what these guys, who are Wall Street pros, could have done here, they may be willing to hold the line and stand for delivery no matter what happens. There's going to be a gap up on the open tonight. There's no way they're going to get around that. But the question is going to be during the morning and what's going to happen tonight between now and 8:30 in the morning when the COMEX opens. Fully expect the COMEX to start raising margin requirements almost immediately. It will happen. Just like there's now 100% margin requirement for buying and selling stocks like GameStop and BlackBerry and Nokia and all the rest of them. Okay, you won't be able to margin these stocks anymore. You're not going to be able to margin. By the time they're done here, they won't allow you to margin gold and silver, which will shut down a lot of people. Now, if anybody got into this thing for February and March contracts, and they're on last week's margin, and they're levered to the hilt at last week's margin requirements, they're going to get stopped out at 8 o'clock in the morning when at 7:45 or 8:30 in the morning when at 7:45 the COMEX says, well, we're raising margin requirements by 41%. And anybody who can't post capital in the next 45 minutes will be forcibly liquidated. They've done this before, guys. This is nothing new. This is how they broke the silver market in the silver bull market in 2011, the night that it was announced that they killed Osama bin Laden, which happened all within a 6-hour period. I know, I was up until 4 o'clock in the morning watching it happen. Okay, that's when silver spiked to $50, and then by the time the market opened on Monday, it was like 35. All of this happened within a 12-hour period. They control the exchange, they control all of this stuff, and there's no way of getting around it. Now, that being said, if there's no physical silver and there are guys who are willing to stand for delivery, even if they bought last week at $25 and JP Morgan and company come in and crash the price back to 23 and they still stand for delivery at 25 and are willing to pony up the difference because, well, they just made $5 billion in freaking GameStop on Friday, they have a real problem on their hands. The long and the short of it is that between now and tomorrow morning, there's going to be an attempt by Wall Street and by the COMEX and the Fed and everybody else to try and put this thing back in the bottle. Okay, there's going to be probably a gap up on the open towards $29 or $30. I doubt it's going to be above the $32 high from the previous run up, and then we're going to see what actually happens. Okay. Now here's the other side of the coin. And this is the part that no one's talking about, which is that what if at this moment in time, this is happening and China finally wants to stop taking punches to the mouth from the United States and from our financial markets? Because let's not kid ourselves. At any one point in time, the Chinese have to control somewhere between 10 and 20% of the physical silver, of the futures market on the COMEX in both gold and silver. Come on. Let's not kid ourselves. They do it through subsidiaries. They do it through offshore accounts. They do it through, whatever, right? If they stand for delivery, or if they're in the money this month, and they're long, and they're in the money this month, or even if they're not in the money, if they stand for delivery. Because one of the things it's hard to explain all of this and not get it wrong. Even though the markets have, the futures contracts have closed, all the people who are in the money on their futures have the option of standing for delivery or taking payment in dollars. And not 95% of silver contracts, 90% of the physical silver and gold futures contracts are just settled in dollars because they're currency hedges. Okay? People don't actually want to take control of 400-ounce gold bars or 400-ounce silver bars and 400-ounce gold bars. They don't actually want the gold. They just want to make the money off the arbitrage opportunities in gold. And the question has always been, when will the people finally stand to deliver and say enough is enough with the amount of price suppression that's going on? That's the question. I know I've gone on and on and on about this, but this is kind of important because this is the moment when the whole structure of our capital markets could come crumbling down. I don't think it's going to happen. I give it long odds that they're going to be able to pull this thing off. But dude, like, that may just be my normalcy bias. Okay? That may just be, you know, me being depressed of having been beaten over the head so many freaking times over the last 20 years. You know, a little punch drunk from the way these people manipulate gold and silver. Okay? So we'll see. I mean, I'd love to see the vaunted commercial signal failure that, you know, Turd Ferguson and Eric King and all these guys have been talking about for 15 years. I'll believe it when I see it. Ted Butler and all the rest of them. I'll believe it when I see it. Well, let's see what happens. All right, now let's talk about Putin's speech at Davos, and then we'll talk about Bitcoin when we get to the charts, because I'm already at 17 freaking minutes. Okay, Putin's speech at Davos was amazing, and if you haven't watched it yet, please sit down and watch. Alex and Alex over at the Duran, they just posted last night their discussion of what Putin was talking about. I'm a little late this morning, not just because I was doing, you know, got up late and blah, 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 but I also wanted to listen to the tenor of the speech. After listening to the Duran podcast, I then wanted to sit down and actually listen to part of Putin's speech. And it's 40 minutes long, so I stopped after about 20 and, you know, hit record. Putin issued a scathing condemnation of everything about European technocratic communism. Scathing. If you hate the Great Reset, if you hate the World Economic Forum for what they've done, if you hate the pandemic that they've created, if you hate all of this stuff, which you should, then I urge you to sit down and listen to Putin's speech. It's honestly more scathing than the speech he gave at the UN in 2015, 3 days before he rolled troops into Syria. And when Putin makes a speech like this, this is usually a signal of a significant policy decision. And I mean by significant policy decision, I mean that he's going to move troops somewhere. Or he's going to shut something down. Biden's been in office, what, 2.5 weeks? 2 weeks? 10 days? 11 days. He's been in office 11 days. There are 3 missile destroyers in the Black Sea as we speak. Not just the USS Donald Cook, but 2 others have entered the Black Sea. There is absolutely no reason for them to be there. And Biden did this after telling Putin he believes in the territorial integrity of Ukraine. People have been discounting the idea that Victoria Nuland is part of the administration. It's just, no, nonsense. The neocons and the WEF hate Putin with an absolute passion because he believes in states, because he believes in culture and nations, not necessarily the state as mother and father, as the overarching, all-weaning, you know, communist overlord, but because he believes that the state as a substitute for a society that operates and exists under one set of rules, that no matter how diverse the population of that society might be. They have an identity, and that identity, and if that identity doesn't work under the framework of the particular state, then that state may have to be broken up. If you were to sit down and chat with Putin about this, he would make that abundant. I'm sure that he would make that argument, which is why when they rebuilt the Russian constitution last year, he strengthened the federal system as opposed to strengthening the control that Moscow, the centralizing power in Moscow has. Okay. Putin, in every way, manner, shape, and form, is anathema, is the exact opposite of Klaus Schwab. He literally told Schwab he was an ignoramus for believing in the fourth industrial revolution. He literally said this is going to destroy the middle class as we know it, which is the only driver of economic growth. He then quoted statistics about how many people have been lifted out of poverty in China through China's opening up of its capital markets and opening up of its economy. Since 1990, it's over 800 million people no longer live in poverty in China. Okay? So mark this day down as the day that Putin put the exclamation point on Xi's speech at Davos saying, we're not down with the Great Reset. You won't reset us. And we're going to take you guys to the cleaners because you're too fucking incompetent to run the world. And it is absolutely in our best interest and in humanity's best interest to oppose you root and branch. That's my takeaway from Putin's speech. I'll be writing about it this week at some point. Probably. Well, we'll see in what forum I decide to write about. Okay. Let's get on to the charts because I've got a phone calls coming to me, so I got to get going. All right, let's get this done. So where are we now? Let's go to the charts and I'll get you out of here. All right, gold. Still recording, yes. Okay, good. I'm sorry. It's just like always trying to keep the technology running properly and not screwing it up halfway through my rant and then having to re-record it. I've done that way too many times. You guys never see it. All right, let's talk about gold. So we didn't get a reversal in gold into the end of the month, but we did get some very strong, I wouldn't say strong, but we got some constructive movement in gold, and mostly on the piggyback of the silver squeeze, which doesn't fill me with, any kind of good tingles here. This is the weekly chart of gold. We had this 5-week uptrend and then a massively bearish bar here. We've gone over again. The high here challenged and broke through these highs here and then collapsed completely. We opened high, ran up, and then they just crushed it into the close. 4 weeks ago, the gold market has not recovered since then, putting in a weak bottom here because we put in a bottom here, then we violated it, and then we couldn't close above this, and then for 2 weeks after that couldn't close above the high of this bar, no less this bar. So gold is carving out a weak bottom here around 1840, 1850. Futures premium has returned. Gold is now back in contango where the futures price is above the cash price. That's a sign of the market expecting there to be supply shortages going forward. That's a good and bullish sign, but it's better when it's $5, $6, $10, $12, $30, or $40, or $80 as opposed to $2. But I'll take the $2. Last week's volatility, we're finally getting back to some almost normal volatility. When you sum these two numbers together, if they sum to 100, that would be normal volatility. We had still greater than normal volatility in gold last week. But gold, having come into the end of January, is still weak on the weekly chart. Now we move to the monthly chart, and technically we're still in this downtrend that started 6 months ago. But December wasn't bad. This was a good constructive bar. We never actually approached the November low in December, and then when we had that breakout, premature breakout to 1950 earlier in the month, You know, gold has held most of the gains from this bar. We close this month in the upper half of this bar. Doesn't mean that this downtrend is over. What it means is that we now have a pretty strong bottom in the 1700, 1750 area. And we'll see what happens coming into February. February will be a pivotal month, right? There's no reversal signal in January because we didn't, we had a downtrend, then we had one bar, and that didn't close above this high. So now we didn't close above that high in January either. So now any reversal signal off of this bar will be considered a weak reversal signal. That's fine. Doesn't have to be strong. We can just trade sideways here through February and into March and wait for this high to then become the downtrend high that we need to break as opposed to this high. They're very similar, but not the same. All right. So that's gold. Gold is in a neutral, is in a weak short-term technical position and in a neutral medium-term technical position. And from a quarterly and annual position, it's still an unbelievable bull market. So don't worry about those things. All right. We just don't know when it's going to break to the upside. All right. Now, silver. I've been talking about the $26 Maginot line for weeks now. And I could just as easily draw this black line in right at 26 bucks or higher. It doesn't really matter. Really, probably should be drawn at 26 bucks. But what's interesting here is that we have back-to-back 2-bar reversals. Here's your 5-week uptrend, and then the terribly, unbelievably bearish bar that reverses this 5-week uptrend by closing below this low. We get a 2-bar downtrend, and then we get a 2-bar reversal because we close above this bar, thanks to the Wall Street bets guys. This is why I told you for weeks that they are targeting $26. That if we don't get a reversal signal in above this $26 level at the weekly, on the weekly chart, and certainly into the monthly close as well, that silver was going to then be in a position to be pushed back down into the low 20s as opposed to be able to make it up into the high 20s, low 30s. So these Wall Street bet guys, they know what they're doing. They knew what the timing had to be in order to get this done. If I can read this chart, they read this chart. That's the point. Okay. Futures premium, we're back to, contango again. It's 7 cents. I'd prefer it to be 20 or 25 cents, but we'll see what that number looks like tomorrow. Okay. We had very high volatility last week, and we'll see where we are. So now looking at January, and this is the difference between the gold and silver markets, which is also a reflection of the monetary hedge versus industrial metals. Remember, our dominant thesis for commodities is that industrial commodities are going to outperform almost everything going forward because the fourth industrial revolution has destroyed supply chains around the world. And everybody is freaking out and they're, laying in supply wherever they can. So one of the arguments against why China would actually intervene here in the silver short squeeze, because they still want to be able to get silver and source it at less than $30 an ounce in order to run their technology firms, right? Silver is incredibly important technology. But let's go back through the silver monthly chart over the last 6 months. So we had the run up and then a 1-bar reversal, and then traded with high volatility in the lower half of this bar for 2 months. Then there was so this creates a 3-month downtrend. We get a 1-bar reversal in December. We break the previous high, which is strong, and then we close up and retest, the middle of the bar, which is great. This is all really good. Higher highs, higher lows. This is your new 4-month uptrend with follow through after a classic 2-bar reversal. So we get a 1-bar reversal followed by a 2-bar reversal followed by follow through. This is great. So $30 is where you want to be looking to see where this is going to go. And then we'll see what happens from there. So again, they picked their timing absolutely properly. Okay. Because the bullion banks and the dealers were setting up for another crash in the silver market. So we'll see if they can actually pull it off. Now let's talk about Bitcoin. Now, I told you on Wednesday or Sunday, whenever I actually told you this. I don't remember if I did it on Wednesday's market report or last Sunday's, but given where we closed last week, given where we were, it was on Wednesday, given where we started to open last week, Bitcoin was in a very dangerous downtrend. And then Elon Musk tweeted about Bitcoin on Friday when we saw it pop to 37,000. And we closed this last night at around 34,000, never violating last week's low. This is significant. So when I told you that the likely retracement point was around 20 grand, the previous all-time high, it was because this bar was shaping up to be just as bearish as these two bars, and the potential to break below the 28,000 level, which is what this low represents, right around 28.2 or so, 28.8, 28.9. So we got all these low tails in here. But, if they keep getting violated to the downside, take this bar out of the equation and just look at these two down bars after the big run up. This is a downtrend. And it was Elon Musk's tweet on Friday pushed the market up to 37. And then we wound up closing, right around 34. Now, I still believe we need 35. And I'm going to show you why in just a second. But right now, we've repaired some of the damage to the weekly chart. It's going to have to be follow through this week, either with no volatility and we just kind of move up to 36 and hold on to it for a little while, or better yet, get up into here and close above this high, which I don't have marked, but you can look up. You can look up what the number is. It looks like around 37.5, maybe 38. So, I'll move back to, or actually that only looks about 36.5 because I think this is only about 37.5. So figure this at 36.5 to 37,000. So we got to move above that and a close above that this week. That would actually do a great job of creating a 2-bar reversal, right? 2-bar downtrend. So a break this week, a close this week above this high would be a 2-bar reversal on the weekly chart, which means that Bitcoin's setting up for a push to 100,000. The reason why I want to see 35 grand today, Bitcoin has not closed the month of January yet because it's still January 31st. It won't do so until 9 o'clock tonight, Eastern Standard Time, or 8 o'clock, whenever it is that this is literally the middle of this bar, the 50% point on this bar. This is a roughly 42,000. This is roughly 28,000. That's 14 grand. So 7,000 off the low is 35. You want to see on bars like this, where you've seen strange, incredible volatility, you always want to see at least a push back to the midpoint of the bar and maybe even a little higher. Okay. I mean, it's impressive that we've had this and we've recovered this far, this fast, but this could just be, kind of weak sauce. So it's important. I want to see 35,000 today. I don't know that we're going to get it. We're trading at, let me see. Let me open up a browser window real quick while I'm doing this because it's practically noon. I don't even have investing.com up on either of my browsers. Sorry. Let's do this real quick. I know this is a little unprofessional, but we'll get there. No, we're trading at 32.9 right now. So Bitcoin is not doesn't look like it's setting up for a big move today. Well, we'll see what happens. So we want 35. If we don't get it, I think it's going to be a bearish February. Okay. And I'm going to worry about this low at around 28 grand during February. Okay. All right. Let's move on to, I want to talk about, so at the same time, I want you to understand that while Bitcoin may be under pressure because it got way ahead of itself, I want you to look at what's happening in Decred. The Elon Musk effect was strong enough, along with Decred's own strength, thanks to the release of 1.6 and that's the fact that there is no damn supply, that we had the big run up to $70 2 weeks ago, along with Bitcoin in sympathy, and then look at the way this thing is trading. This has not been trading with lower highs and lower lows, but rather coiling. Right, so we're getting high volatility, and then here's the high, higher low, lower high, higher low. This is This is setting up as a kind of what they call a pennant formation, which sometimes winds up being a very strong continuation pattern. We get the breakout on Friday, where the whole crypto market goes nuts, and then Decred holds on to it and closes 25 cents above the high from here. This is technically a 2-bar reversal on the weekly chart. And then follow through this morning. And Decred this morning is trading, and it's moved up since when I put the chart together, it was trading at 64. It's not trading at 67. So Decred's going to $100, guys. Like, there's rotation happening out of Bitcoin, and people are starting to realize there's something here that we've been missing. And people are looking for liquidity sinks that they couldn't find previously. So now let's look at the monthly chart of of DCR. Going all the way back to its inception in April, when it really started to trade. Once the ticket price, this back here, this is just all this craziness is just because the tickets for the staking system were just off the charts and there was no liquidity, right, in tickets. Once they fixed that in code, volatility dropped and so did the price and blah, blah, blah. And then we, got a nice bottom form here for 2 years. Is roughly around, right around in here that I got involved in Decred. This breakout here is on pure illiquidity. There's less than 25% of the actual float of 12.5 million coins on the market. There's no supply. 54% of it is tied up in staking the blockchain to secure the blockchain. 2 million of the freaking coins haven't moved in over 2 years. Cal agrees with me, by the way. And the rest of it is bound up on exchanges. There's just no supply. And so when there's no supply and there's tremendous demand and people aren't sure where to go in Bitcoin because they think it might be overvalued, and Wall Street is as short Bitcoin as they have ever been, if not more so, by almost an order of magnitude. So now the massive short squeeze that could be coming is in Bitcoin, and smart and savvy guys are getting out of the way, waiting to see what happens here, and they're looking at Decred, market cap of less than $1 billion, going, yeah, I'll buy some of that. I can pull a 6% yield over that and watch this thing go through the roof. The story is starting to get out, and once the story gets out, watch out. I fully expect to see Decred trading at $500, and I'm not kidding. Market sentiment, momentum, and fundamentals are all lining up for a massive move if Bitcoin makes a run towards 100 grand. Okay? This is just one of the options in this space, but I think this is the best one of the bunch. And I know some of you have emailed me and said that they bought in. Thank you for recommending this coin to you guys. I hope you do well. Okay, but at the same time, I wouldn't be buying in here right now. I would be waiting to see what Bitcoin does. You got to watch the Bitcoin market carefully. Okay, because if there's any pushback towards $28, look, Decred's going to drop into the 40s. Okay, so just be careful. All right, let's talk about what I think is happening in the dollar. The dollar index didn't do anything interesting over Wednesday. So if you want to know what my thoughts on the US dollar index, you can go listen to Wednesday's market report. But I will note for you that I've got two short-term charts in the Japanese yen. The euro has been bound down. They're not letting it move because the European banking system is a freaking mess. The political situation is a freaking mess, and they're not going to let the euro sell off. They aren't. And as a matter of fact, Friday's moves in the euro to the upside could just as easily be a run on euro hoarding because there's dollars are drying up, or because there are carry trades unwinding in the Japanese yen, because the euro yen cross is always a very interesting thing. I don't have the euro yen cross for you this morning, but I do have to tell you this is the weekly chart of the Japanese yen, which has been in a very strong bull market for over a year now. And now we have this, we had a breakout, what looks like, they tried to hold this line. I think this might actually be a 1-bar reversal here. If not, it's really close, but it took 2 weeks, and now we've got the big breakout here. So consolidation, bottoming pattern, breakout. And I want you to note why we've gotten such a strong move. This is the last 3 days. This is Wednesday, Thursday, and Friday. This is when all this GameStop stuff was going on. People having to sell yen to get dollars. Are there carry trades unwinding? What's going on here? This stuff is crazy. Okay, this may be your signal that there's something else going on we haven't quite seen. We can't quite see it yet. So just from a retail investor's perspective, just from a retail market analyst perspective, who doesn't have a Bloomberg terminal, yada yada yada. This is maybe one of those signals you want to pay serious attention to. Okay. And the last thing to talk about this week is the Dow. So in all of this craziness, what did we get? We got a sell-off in the Dow on Friday because a lot of people had to liquidate long positions in stocks in order to cover their freaking margin calls. And it was significant enough to violate the low from 4 weeks ago. There's the low for this week, 829.856. There's a low from 4 weeks ago, 29,881. Now we didn't close below that, closed at 29,892. I wonder why. Just saying. Wonder why. But any further follow through the downside, I told you gaps on major charts like to be filled. We're going to see this gap filled. You're just going to see it filled. And it may be this week. We're setting up for a perfect, we got it. 15, 16 to 1 pot odds that that's what's going to happen. Yeah, 16 to 1, 18 to 1 pot odds that that's what's going to happen. Let's see what happens. Right? Yeah. And then for the monthly chart, though, I mean, again, I'm not bearish on the Dow because of this. This is just, I think, a short-term thing. We're setting up for a bearish February. This is pretty normal volatility in January, and we've got a 85% chance of breaking the previous low versus breaking the previous high. This is what, 6 to 1. So we got 6 to 1 pot odds that we're going at least lower than this low. And then whether or not we get to that low and then break through, this bit what amounts to the support area is going to be the big question. I still think this was a false move down. This is the breakout. This is the market doesn't know what to do right now. And at a monthly level, it's just beginning to churn and kind of grind higher. But if we start to get real craziness in Europe or Japan or anywhere else for that matter, or in the US, we're going to see a correction in stocks. That's what I've got for you. All right, so I'm going to start cueing the music, and you guys are going to take care for this week, and we'll be back Wednesday. I have confirmed I am speaking with Robert Barnes for this week's podcast at 3 p.m. on Tuesday. That conversation will happen, and I will put it out that night, hopefully before the live stream goes. We go live for the live stream. So really looking forward to talking with Robert. Apparently he's a fan, so gotta like that. All right, you guys take care. You be well. Oh, I don't have the music. Where's the music? Oh my God. Where's the music? Oh, I'll keep talking. So cow, no, there's the music. You ready? So let's get started. You guys take care. You be well. We'll talk soon. Keep your stick on the ice.